Staying with the economy, new project announcements fell sharply in the December 2018 quarter. That's according to data from the Centre for Monitoring of Indian Economy. Projects worth 1 lakh crore will launch, which was the lowest, at least in the current government's tenure, based on the data that we have from CMIE. Let's find out how best to read this. Mahesh Vyas, Managing Director and CEO at CMIE, is joining us on the phone line. Thank you, Mr. Vyas, for joining us. My first question to you is just that. What and how much should we read into the data for one quarter, or should we look at a longer-term trend and try and draw inferences from that?
So, first of all, the new investments estimate of 1 lakh crore or 1 trillion rupees is a number that will get revised in the coming weeks. So I expect this number to go up to around 1.4 trillion in about 4 to 6 weeks, maybe 8 weeks, and that will be the more stable number. But even if you take it at 1.4 trillion and not just 1 trillion as we see now, this will be one of the lowest new investment proposals being made in some 14, 15 years. So this is really a new low. And we have seen this trend of falling new investments being more or less a continuous trend since 2015.
When you say there's been a steady decline in investment, Mr. Vyas, what do you think could be the reason? Is this is this because of waning demand, or is this a capital issue? Is this a funding issue?
This is not a funding issue. So very clearly, when we ask companies what are the reasons, and the ones who answer usually give other reasons. Funding is not an issue. The projects that tell us that funding is an issue are those which are very highly stressed companies financially already. So that's a biased answer. So I don't think funding is an issue. The problem is essentially demand. And there is a problem on demand, and that's the reason why capacity utilization, as seen in the RBI's OBICUS survey, is still low. I expect, therefore, new investments to not pick up significantly in the coming year as well.
Vyas, how do we reconcile this with what we have seen as part of the GDP release, which is the gross fixed capital formation numbers? They've been showing a positive trend, and I think for the last 4 quarters we've seen double-digit growth. And while capacity utilization is still not at the kind of levels that usually spurs large private investment, it has been steadily rising.
So the GDP numbers are largely influenced by 3 or 4 lead indicators. Principal amongst them are production of steel and cement and production of machinery items. These 3 indicators play a major role, and a fairly aggressive growth in roads in the recent past has led to steel production and cement production remaining quite high. Cement prices have been low, but volumes have been good. Indicating that there is good demand from the construction, at least the road construction segment. That shows up into capital formation. Whereas what we are capturing over here is a larger sentiment of all those people who are saying that we want to set up new plants. I think the larger statement is that investments are not happening, not only in terms of new investment proposals, but also in terms of completion of the existing proposals on hand. So we had seen an increase in new investments commissioned, reaching up to 6 trillion rupees 2 years ago, and we are seeing this fall to 5 trillion, maybe even a shade lower than 5 trillion this year.
Precisely, Mr. Vyas, because I think if you sort of look at the stalled project data, which also CMIE puts out, again in this quarter there has been a spike in the stalled project number, although I know that number tends to be volatile as well.
That is true. So this quarter's stalled project has spiked because one project in Maharashtra, a refinery, has been stalled because of land acquisition problems. So a few projects did get stalled, but this refinery was very big. I think its investment proposal was around 3 trillion rupees by itself. So this is a very big investment, but land acquisition stalled it. And a few other projects also got stalled because of land acquisition. So land acquisition is a larger reason why projects that get announced then get stalled.
Okay. Mr. Vyas, just one slightly broader question though. When you speak to large companies, their order book positions and their forecasts seem a bit optimistic than what they were last year. How does that sit with the numbers that you're seeing?
We also took notice of this increase in order book position in June 18, and that's when we did write that this looks like green shoots. It looks like there's a turnaround coming about. And the June 18 new investment proposals also did increase, but that did not sustain itself. For example, we saw in March 18 and June 18 new investment proposals go up to around 3 trillion rupees. So that was very promising. But now it's down back to 2.5 or 1.5, that level. The information we get from CapEx companies that their order book positions are improving is actually a reflection of very good progress we're making in road sector. So many of the listed companies are finding traction because road investments has been increasing very well. And this is very, very different from what is happening to the rest of the economy.
Mr. Vyas, if one looks at both the new projects data and the stalled projects data, is there any shift in trend in terms of the contribution of government and private projects, both in terms of new announcements, but also whether more government projects are now getting stalled compared to earlier?
So the refinery that got stalled in Maharashtra is a government project. It was announced by the Ministry of Petroleum and Natural Gas, and that is stalled. Government projects do get stalled. There is a project there's a furniture hub in Kochi, which in Kalamassery in Kerala that also got stalled. So all kinds of projects do get stalled. The share of government projects in projects getting commissioned or announced has been increasing, and that's largely because of the road sector. But for the rest, stalling can happen across the board. There's no reason why a private sector project cannot get stalled compared to a public sector project.
All right, Mr. Vyas, just a last question to you again, on the broader trends that you see both from your data and from other data sources. I think the last GDP number we got suggested that there is a slowdown in consumption demand. You alluded to it earlier as well. This is just as investment is starting to pick up. If that trend continues, doesn't bode well for sort of increased and stronger growth in the quarters ahead?
Lack of sufficient demand is the main reason why, in my opinion, investments ain't picking up. The lack of demand is seen in the capacity utilization numbers and even in the very low plant load factor of thermal power plants. Till capacity utilization does not come up, till pricing power of the farm sector does not come up. Mind you, farm prices are extremely low that just kills demand from a large rural segment of India. And that's the reason why loan waivers demand go up as they are. So I think very low prices for farm products, extremely low inflation is actually hurting demand. And that is hurting investment cycle pickup.
Mahesh, Vyas, always a pleasure. Many thanks indeed for joining us with that perspective. That's a view from CMIE on declining in investments.